Ladies and gentlemen, please welcome your hosts of That Startup Show, Benjamin Law and Rae Johnston.
Welcome to That Startup Show. I'm Rae Johnston, and this is my co-host with the co-most, Benjamin Law.
What you may not have realised is that those phone boxes we emerged from are actually cash grab booths.
Of course, you couldn't see any money in there because it was all cryptocurrency, which doesn't exist.
It's like I've got some Ethereum on me. Is that dandruff coin?
Actually, what is that you're wearing?
Oh, okay, so this is my launch merch for the BenCoin, the newest cryptocurrency to market. In fact, if you want a piece of this exciting new ICO, you can actually scan me right now.
You are a walking QR code.
Yeah, we've got to fund this show somehow. I'm serious, peeps.
Well, tonight we are talking money. Where does it come from? What do you do when you get it? Is all money equal?
Who is money and why? Is 7 years of unfinished tax returns too many? I'm asking for a friend. The big questions.
Look, most startups fail within 2 years, which would be fine if they were an Australian Prime Ministership.
But really disappointing for a small business being run out of a shed.
And so much of it comes down to money, right?
Because money is power.
And power is energy.
And energy is mass.
And mass is weight.
And weight rhymes with hate.
And if the Phantom Menace taught us anything, it's that hate leads to suffering.
If the Phantom Menace taught me anything, it's that I do not dig Ewan McGregor with a ponytail.
Not this again.
Don't get me started on Hayden Christensen's little rat tail thing. I'm sorry, but this is my show now. My list of 20-year-old hair gripes. Just being told that I'm fired.
Now, investors will ask a lot of questions before they give you what the industry is calling moolah.
Them doubloons.
What's your burn rate? What's your churn rate? What's your customer acquisition metric? How many daily actives? How big is the market? How fast can you scale? What's your plan to monetize? What's the likely exit? An IPO, an M&A?
Now, personally, I'm a fan of the NCIS.
Is that where you launch a spin-off set in Los Angeles?
Exactly, with LL Cool J. But Rae, investors aren't just driven by the numbers. They're also motivated by herd mentality.
Yes, rushing towards the hot new thing or away from something that's fallen out of favour, just like big, dumb animals.
Who could destroy us with their millions of dollars.
So, publicity, perception and timing are also crucial.
Which is why tonight we are going to get to the bottom of how you can be in the right place at the right time, saying the right things, wearing the right underwear to get the right funding for your brain baby.
Is that what we're calling them?
Or skull spawn?
Brain baby it is.
Good call.
Remember, if you want to join in the conversation, you can do it by tweeting us at TSU Show or using the hashtag That Startup Show.
But now it's time to cross to our correspondent on the floor, Melissa Mack from Fintech Australia. Who's down there and what the hell are they doing?
Thanks, Ben and Rae. I'm down here with some of our financially literate crowd, and in an effort to support Ben to raise awareness of BenCoin, we're going to update a classic financial game for 2018. And some of our lucky crowd may get to take home some BenCoin as we play Cryptopoly. Now, despite what it sounds, it's not for dead people. So I've got John here and Kyle, and we're going to play Monopoly. Do you guys want to pick an icon? Amazing. Now, the best part about this is that as we go past go, we actually get to collect a BenCoin. So we're going to get into this now, and it's back to you.
Thanks, Melissa. So obviously, Ben, you and I are both all about money.
Absolutely. You know I had a show on SBS, Multicultural Broadcasters, where the millions of dollars are at. Zimbabwe dollars, but still.
And as a journalist, I mean, talk about rivers of gold.
But that was more because you couldn't afford to fix the office coffee machine, right?
Still counts. But just in case that's not enough, we've brought in some PWACs, or people who actually know stuff.
Our first guest had a 20-year career on Wall Street in asset management and in securities research. That's in securities research, not the research of insecurities, although she may have come across some of those as well.
She was also Global Head of Cash and Short Duration at CS Asset Management. She's now a Managing Partner at Golden Seeds LLC and Golden Seeds Fund 2, investing in over 40 companies predominantly led by women. Please welcome Joanne Cochran. And our next guest is a technologist and entrepreneur who's spent 2 decades designing, building and advising businesses across blockchain, machine learning and even future food, which I've always thought was anything currently in the microwave.
He was also Executive Director at MyVote, a not-for-profit democratic movement. Now, if you're wondering what a not-for-profit democratic movement looks like, it's basically the opposite of the Trump family. He has since co-founded one of Australia's first blockchain projects, which ICO'd for almost $2 million. Please welcome Horizon State CEO and founder, Jamie Skella.
Welcome, welcome. So the financial world is currently in a state of flux. I wanted to ask, what is the future of money? How will we measure value in 20 years' time, say? Should I keep hold of my bottle caps, basically?
Well, I would.
Yes.
I hate to say this in front of a room full of entrepreneurs, but my perspective as an investor is that there's lots of money out there right now trying desperately to find its way into startups and growth companies. I know sometimes as an investor, as an entrepreneur, you don't feel that way. It feels exactly the opposite. But for me, there's just a flood of money going into things. And most of it is still coming through the traditional pathways of high net worth individuals, angel investors, either singularly or working in groups, or through the venture business where somebody else manages your money and puts it into the early stage investments. We are seeing some different things in the US now and the UK where we're seeing equity crowdfunding platforms where people can essentially put smaller amounts of money into deals and use a different set of securities laws to do that. And I think you're going to have a similar thing here in Australia. And then Jamie can speak about the real innovation in the market for money, but my feeling is until we see a global recession or some kind of major liquidity event, there's lots of money out there trying to find a place.
And Jamie, does that fly with the Australian conversation and context as well, that there is a flood of money struggling and trying to find the right projects and startups to invest in?
There's certainly a flood of money finally. It's been pretty tough for Australian investors, entrepreneurs, not investors, in respect to finding appropriate volumes of funding for ideas locally. I think there's still a little bit of burnout from high net worth individuals from the dot-com bust. It's a long hangover in this case, and a lot of people would argue that there isn't really a venture capitalist scene here in this country, and so finding money has been tough up until the advent of this token sale model, an ICO, or a token generation event, whatever you'd like to call it. And this has really made it clear that the money is available, maybe not so much locally, but when you're able to take away the gatekeeper, take away a middleman, and I guess be able to raise in a much more peer-to-peer way with lots of people from all around the world, that there's absolutely enough money there. And I think we're seeing quite crazy amounts of money flow into some deals because of this. ICO is raising hundreds of millions of dollars in some instances, in many instances unjustifiably, I would say. So I guess that's the future of funding, the future of money more broadly. I'm obviously a believer that crypto assets and cryptocurrency has a pretty important role to play moving into the future as well.
So digital bottle caps.
Yes.
Fantastic.
Now, speaking of funding, Jamie, Joe, we're now going to play a game called Fire, Fund or Advisory Board.
Now, This is how it's going to work. I will list some names and you have to buzz in and tell me if you'd fire them, fund them, or put them on your advisory board. And we do need to remember that putting someone on your advisory board is basically one step above adding them to your Google circles.
Now, can you please test your buzzers? Jamie. Lovely. Joe.
Let's get started. Fire, fund, or board member. Evan Spiegel.
I think I would fire.
Ooh, any reason why?
I've thought about it. It's probably just because I'm already too old to understand his product.
Yes. Okay, Joe, Jamie. Fire, fund, or advisory board. Beyonce. Oh, that was very enthusiastic.
It's not a question.
Because of fun, because she's awesome.
Excellent.
Yes.
Next name on the list, Travis Kalanick.
That one's easy because he's already been fired.
The decision's been made for
The
you.
decision's been made.
And you wouldn't make a different one?
Look, he may be an innovator. He may be a tremendous entrepreneur. I'm not sure. I've only been observing from afar, but it's clear that he probably isn't the best people person. There's some pretty significant HR issues that he's left in the aftermath over at Uber.
Next name on the list, Elizabeth Holmes.
Fire.
Yeah. I mean, the decision's been already made for you as well.
From my vantage point, for years you were looking at that company, and Elizabeth Holmes was the CEO of Theranos. This was a company where the board was filled up with people of note who knew nothing about the industry in which the company was supposedly innovating in. There was nobody on that board who knew anything about that industry and no investor in that company that had any expertise. This was from a long time ago.
Last one, everyone. Fund, fire. What were the options again?
Or advisory
board.
This is your game, Ben. You should know.
Last one. Fund, fire, or advisory board. According to Forbes magazine, a self-made billionaire, Kylie Jenner.
Advisory board.
Not going to fund her?
There was a huge helping hand from the Kardashian empire, but given that, she's still really connected. There's lots of money floating around. And
Good to have in the room.
Yep.
But now it is time for part one of the pitch ring.
Welcome to the Pitch Ring, where we are going to meet three keen entrepreneurs who think they have what it takes to take what they can get to take it to the next level. I think I'm having a stroke.
Tonight's winner will not only go into our season grand finale with a chance to win some great prizes, but they'll also take home the coveted prize, which proves they are the Australian version of the unicorn, the Unaroo.
Science hypothesises that humans will one day evolve a horn, like the Unaroo, to allow us to transport donuts without getting sugar all over our hands.
Finally, the future is looking good.
Our guest panel will judge the pitches on originality, marketability, scalability, and self-control. That's right, whoever can resist eating this.
You're gonna eat those.
Straight out of it, yeah. Basically, it just looked too good.
The rules are simple. Rule 1, you have 2 minutes for your presentation. Rule 2, at 20 seconds to go, you'll hear this sound.
Rule 3, no calling money doubloons, that's my thing.
The panel will give each presenter feedback after their pitch. Let's start it up. Our first pitcher is in the business of smart checkouts, which to me is any checkout that doesn't say unknown item in bagging area. Please welcome Martin Karafilis.
At Skella Technology, we teach checkouts to recognise products without barcodes. What's your pain point when you go to the shops? Mine's the checkout process. What's to like about it? Long lines of frustrated customers just waiting to get out of the door, and then you go to check out your fruits and vegetables at the self-service checkout. You're presented with this huge menu of all different types of items, some of the stuff you've never even seen before. And what were those red apples that you got earlier? Pink Lady, Red Delicious, Royal Gala? I tell you what, we'll just put it through as the cheapest onion we can find and get on out of here. It's a pretty time-consuming journey. You're really tempted to take away that food with either putting it through as a cheaper item or not paying for it. And in Australia, supermarkets lose up to $200 million worth in theft, and they're resorting to measures like wrapping fruits and vegetables with plastic just to stick a barcode on them. At Tiller, we want to reduce this waste. We want to optimise the checkout process, and we want to minimise the opportunity for theft. To do this, we've created a camera system called the Tiller Vision. Tiller Vision sits at the checkout and recognises your fruit and vegetables so you don't have to. Using artificial intelligence, it pre-selects your items so you don't have to search through the menu anymore. It's incredibly fast, extremely accurate, easy to install on existing point-of-sale systems, and most importantly, it doesn't need internet connection to run. And on the back of all of our media coverage in the last little while, we've started to work with manufacturers and supermarkets globally as we look to launch our product in the next 12 months. Through this time, we're looking for investment, and you can contact us through our website at tillita.com. I'm Martin Karafilis from Tillita Technology. Thank you.
Thank you so much, Martin. Joe, any questions about Tillita?
Yeah, so Martin, can you, so it sounds like a great idea. Can you give me a sense of what's the ROI for me as a retailer?
Yep.
How much does this thing cost? How much money would I save from it? And so over what time period? Because I have to make the capital commitment up front. So what's my ROI and my time?
Absolutely. So some of the figures from the Australian Retail Association actually show that $38 billion worth of potential losses are actually sitting there with supermarkets at the moment due to abandoned carts, due to long lines. So cutting this time down, so we can cut time from each vegetable right down from 10, 15 seconds down to 2 seconds and below. So that's the real advantage that sits there.
What about you, Jamie? Any questions for Martin and Tillita?
In terms of practical use, what's the error rate? And I mean, it seems to me that these self-checkout terminals have a hard enough time scanning barcodes.
Yeah.
I'm curious to know how much easier or harder this is. What is the time per scan? Is it simply a matter of quite literally dragging it across and we're done, or is there a moment in time where you have to keep it there?
Yeah, so obviously you have to weigh the product. So during that process, it's actually under 2 seconds that we can recognise that and automatically detect it. Like you say, barcodes are actually quite efficient, but we can scale this product to other areas without needing barcodes as well. The error rate, when you talk about it, we're actually testing this in supermarkets right now and we're receiving results of over 99%. So this is not lab conditions, this is out there. This is not just here in Australia as well. We've got the system in the US and in Europe. And one example of this is we've actually had to do minimal to no training when we've gone over to these areas and actually had the same results.
Thank you so much, Martin.
Awesome. Thanks, guys.
Now it's time to check back in with Mel on the floor to see who's snapping up the BenCoins.
Well, our cryptology game is going very well. Naturally, people have spent time in jail, and I can see everyone is collecting BenCoin, but they do seem to be running out of cash. As the bank, I'm collecting a lot of BenCoin, so it's all going really well for me. Back to you, Rae.
Thanks, Mel. You're watching That Startup Show, the show that is pretty much exactly Breaking Bad, but instead of meth, we have coffee, and instead of sudden violence, we have constant anxiety.
Now, alongside his business, our second picture has an excellent collection of blue shoes. No, it's not the reanimated corpse of Elvis. Please welcome Stuart Stoyan.
Hi, I'm Stuart Stoyan, founder and CEO of MoneyPlace. We're an online personal loan provider. We do this by providing a personalised interest rate. That's a rate that's specific to you as an individual. We grab a whole bunch of data and come up with a personalised rate that ranges from 7% through to about 20%. Now, on average, we save our borrowers $5,400 versus a loan from the big banks. In our 2 years of operation, that's meant that we saved over $15 million for MoneyPlace customers, and we're really proud of that. What we're also proud of is the industry recognition that we've had around a number of awards and a number of prizes that we've been able to win through different competitions. Most recently, we've been included in MetLife's Inclusion Plus, which is about financial literacy. So one of our core values and missions is about helping to improve financial literacy for all Australians. And to do that, we've just launched a new site, MoneyPlace News. You can go to news.moneyplace.com.au to be able to check this out, to be able to get tips, tricks and hacks that help ordinary Australians to be able to get more financial and to be able to better understand their finances. So what we're asking for tonight is for you to be able to go to news.moneyplace.com.au, check out our site, provide any questions and any topics that you're specifically interested in understanding more about. But also as a second ask, we actually have an ask from the MoneyPlace team. As mentioned, we're MoneyPlace Blue. We're blue through and through, and we like to wear blue shoes. Now, what's important about these blue shoes, I'm not sure if the audience is going to be able to see this, but they're personalised MoneyPlace blue shoes. And so the really important ask on behalf of the MoneyPlace team is for somebody out there to be able to help fund more swag, because swag's important to us at MoneyPlace, and it's especially important for our personalised MoneyPlace blue shoes. Thank you very much.
Joe, do you have any questions about MoneyPlace?
Yeah, I do, Stuart. So does MoneyPlace actually provide the capital, or do you provide the technology to other people who provide the capital?
Yeah, great question. So we provide the technology. So we're a marketplace. So we provide borrowers with loans, and then on the other hand, we have investors that we then match into those loans.
So is it peer-to-peer lending?
It's similar to peer-to-peer. It's just that our investors are institutions, so we feel it's a little bit disingenuous to be able to call it peer-to-peer if it's a large financial institution that's lending to you, or potentially a smaller financial institution.
And so, and what's the business model? Are you in this for the VIG, or are you in this for a technology fee that you charge the underlying providers of the capital?
Truthfully, we're in it for the swag, but outside of the swag, what we're actually in it for is we charge our borrowers an establishment fee, and then we charge our investors an ongoing management fee. What we have is a team of people with typically 15 to 20 years experience working in consumer lending. We've built a best-in-class credit model that helps us to be able to decision personal loans better than anybody else in market. And we bring that to our borrowers to give them a lower interest rate, but also we're able to give our investors the opportunity to invest in personal loans and to be able to generate a good return. So our average interest rate's about 10.5%, 11%, but our average investor return's about 8.5%. So it's a superior fixed income return for our investors.
What about you, Jamie?
When we talk about the market, whereabouts are you operating at the moment? And in whatever markets you're operating, what would you say is your defensibility for the model? It seems like something that wouldn't necessarily be too hard for someone to knock off.
Sure. We operate in Australia, so we provide personal loans, unsecured, $5,000 to $45,000 in the Australian market. This is available to all Australians as a personal loan. In terms of the defensibility, what we see though is that there's a move in the industry towards comprehensive credit reporting and open banking. We believe that we're well ahead of the curve on that in terms of we're already using personalised data. We're already using transactional data, behavioural data to be able to create a credit assessment and to be able to create that interest rate and ultimately to assess the likelihood of default. And we feel that while the banks are large, they are way behind, and I guess the very nature of banks is they're not so good at innovation. And we see that as being a core differentiator for us, and we see that as a very strong defensible position in the market.
Thank you so much for that, Stuart. Stuart, everyone, or Blue Shoe Stew.
We'll be back with our third picture and the judging soon. But now we want to have a bit of a chat with our panel about showing us the money.
Now, Joe, we hear a lot about numbers, metrics, statistics being important in making your case when it comes to pitching a startup. But what about the story and the narrative of what you're trying to do?
I see 30 to 40 pitches a month. And how much time I'm going to spend with you is going to be dictated by how much you can let me know in a very short amount of time. What is the problem that you're solving and why does it have value? Is the problem big enough? Do you really solve it? and how are you going to grow that business? So having your story well put together in sort of a 30-second pitch, a 2-minute pitch, and then a 10-minute pitch. I'm not going to invest in you based on that, but the first couple of meetings is for you to get the next meeting and to get a meeting with the rest of my partners and to get us to do due diligence on your company.
And of those pitches that identifies a problem and also identifies how you want to solve the problem, what then makes one of those pitches stand out?
So one is, so you talk about what's the value proposition, which is I have this product market fit. Then you also have to have a growth proposition, because having a good idea that cost a fortune to get it into the marketplace, those two things don't balance. So you have to be able to have a good idea and have a way and an understanding of what it's going to cost you to grow that solution into a business. So those are the first two things that I want you to tell me about. And telling me a lot about your technology in the first meeting, but not telling me anything about the business, probably doesn't get me to the next meeting unless there's something so completely cool about the technology that I think Beyonce. And most technologies just aren't that cool. Okay, so I don't invest in cool ideas. I invest in potentially big businesses. So that's what I need you to get across. And it's a story, and if you already have revenue, if you already have paid pilots or anything like that, and you can show me any metrics around that, that just lets you move up the curve faster.
Jamie, your story is a bit of an interesting one. Horizon State successfully funded itself with an initial coin offering, which can sometimes have a bit of a bad rap. But why did you go down the ICO route?
A couple of reasons. One is that we're building out blockchain technology, so leveraging this same technology to go to a capital raise made sense in terms of alignment. We aren't a bricks and mortar retailer trying to run an ICO. This is legitimately relevant. But I also think that philosophically there was an opportunity here which resonated with me to try and, I guess, better distribute wealth and opportunity. Now, this isn't necessarily to say there is strict alignment with our model, but I think what this technology enables is the opportunity to generate wealth and investment opportunity in a much more equitable way. We have the opportunity to have people participate with just a few dollars from anywhere in the world with virtually zero fees and zero borders and support a project that they love and hopefully share in its success. Now, there is obviously a lot of terrible stories out there, but something that didn't sit so well with me in previous raising rounds for previous startups is that when you're going out to high net worth individuals and institutionals, if you are successful, ultimately you're continuing to propagate making the rich richer, which is all well and good. Most of them, I think, have worked very hard to get there, but it is nice, I think, philosophically, whether it's a little bit idealistic or not is another matter, but the idea that we can sort of spread that out a bit further is something which I think is a powerful idea.
Joe, what about you? Is there a problem with how some investors might view startups? There's this focus on fast initial capital growth. Does that sometimes get in the way of what some startup founders are trying to achieve?
You know, there's lots of ways to have a business out there and to make a very good living from a business. And it doesn't necessarily mean that you need to raise capital because half of the businesses that get started are really, some of them are by necessity and some of them are really good lifestyle businesses where you don't need to raise capital. So, but if you are going to raise capital, I think it really generally has to be because people think there's a way to put the money in your company and then in 7 to 10 years get it out in some kind of liquidity event. And if there isn't relatively fast business growth, it's hard to lock up your money for that long. So I don't necessarily think there is a problem with the way people look at startups. I think there might be a problem sometimes for entrepreneurs who think that they have to go raise capital when the kind of business that they're building may be better off as a bootstrapping opportunity.
And how do you know the difference? Is that just about stepping back and really asking yourself, do you actually need that or not? Or is it about getting some independent sort of advice and perspective?
Well, I think that certainly you want to get as much perspective as you can possibly get. But I think you want to think about how big is this potential idea and how protectable is it and how leverageable is it? Because if the total addressable market isn't large enough that you can have consistent growth rates, the first 2 or 3 or 4 years, you have to double to make it worthwhile to have an outside capital investment. And if your marketplace isn't big enough for that, that doesn't mean you're not going to have a fantastic living off of your business. It just means maybe you shouldn't be raising capital. So I definitely think you need to look at that. And then I think you have to look at how protectable is it? Because sometimes if you keep a business small, you don't have a lot of other people come running in to try to duplicate what you're doing. So reasons to think about that. And if you have a business that's more like a consulting business or something that's not quite leverageable, whereas the revenue goes up, the expenses go up pretty much the same, that doesn't mean you can't take a nice percentage out of it, but it's probably not something that investors are going to put money in. And maybe you can't figure it out for yourself, but just go around and talk to people. And it's hard to raise money. And if you don't need it or your chances of getting it are slim, I think you're much better off focusing on bootstrapping and building your business without it.
Now, Jamie, Horizon State and My Vote are redesigning democratic systems to give people more power. That's a powerful statement in itself. Do we need to shake up startup funding or even the monetary system itself? Just the small questions here on that startup show.
Let's start with the monetary systems question. I think we're at an interesting point in time. I mean, we've traded in a peer-to-peer fashion for thousands of years, anonymously, directly. Once it was barter, and then it turned into gold coins and eventually paper money, which it's no longer backed by gold anyway. So what we have is a relatively recent anomaly where quite a large portion of our transactions, of our monetary management, is under the gaze of institutions and governments, not necessarily explicitly and overtly, until, of course, things aren't so stable and people aren't so complacent. But the near-term future, especially in places like Australia where cash is already fading, is that we were heading towards a future where that 1,000-year tradition of peer-to-peer trade, anonymous, direct individual trade, was kind of on the verge of extinction, in the sense that if everybody's sort of tapping and going using their credit card or Apple Pay or whatever the case might be, all of a sudden the entire flow of money is through these institutions, which is all well and good, as I alluded to earlier, when things are stable. But when things aren't so stable, you just have to look at other less fortunate regions around the world to see what happens. And so with cash fading away and electronic being a primary means of payment, we were very near a world of permanent financial surveillance, where, as we've seen in other countries, funds can be seized, funds can be frozen, a clip of the tickets can be taken. And so cryptocurrency in this sense has arrived just in time, I would argue, to kind of replace that cash and make sure that there is some self-sovereign opportunity to manage our money in the way we see fit, even if it's only a part of our net worth, not all of it. In the same way that somebody might store some cash under the mattress, now there is cryptocurrency. So it's, I guess it's defense against the future, and it's defense against nation states more than anything else, which is not front of mind for people in this country. But the world is cyclical. History doesn't necessarily repeat, but it does rhyme, and things won't be brilliant in Australia forever either. So
just look at my home country.
What was the other question?
Well, it also makes me think, what is blockchain, or what will blockchain do to our concept of value, and are we already adapting quickly enough to accommodate for that change?
I think it's important to make sure that we, because it happens often, that we're not conflating blockchain and Bitcoin or blockchain and cryptocurrency, because of course they're very different things, and Bitcoin was the first mainstream, I guess, consumer adoption of such a technology. The technology itself is really, really exciting, but it's some of the principles of Bitcoin that make it so profound and so potentially influential for governments and the way that society organises itself over the coming years. For me, I think there's a lot of tremendously positive applications for blockchain outside of currency and finance, which are almost more exciting. I know this episode is supposed to be about money, but obviously I'm working with this technology on opportunities to more or less work towards the eradication of corruption in our democratic processes. We have other use cases which involve peer-to-peer energy trade, Power Ledger over in Perth doing great work, which enables Joe and Sue in the same neighbourhood to be able to throw up some solar panels and trade energy automatically and cheaply and instantly between one another, rather than going to the big energy providers where we actually only spend 20 or 30% of our bills on actual power. Everything else is related to grid licensing and marketing and other overheads for that institution. And then we've got the media and licensing and entertainment. If we think about Spotify and what a disintermediated, decentralized version of that might look like. And instead of most of your $13 going to Spotify every month, most of it would go to the artists, and the rest would more or less be in network fees for the people verifying transactions. So there's a huge amount of opportunity, which ultimately all has economic impact. We're going to see some power vacuums and some wealth vacuums start to fall over the coming decades, I'm sure. It's exciting, I think.
You're an optimist, aren't you, Jamie?
I like to think of myself as a rational optimist. Yeah.
Wonderful. Now, Joe, as we mentioned in your intro, you've funded a lot of female-run startups. Why is this a particular area of focus for you?
Well, a couple of reasons. One, it's just fair that women should be able to participate in the private equity markets as much as men do. In the US, women start about half the businesses, and they get a really small portion of the capital. In the angel markets, they're certainly doing better. Over the last 10 years, they've gone from getting about 3 to 4% of the capital to now it goes back and forth between 20 to 25%. So that's pretty good. Yeah. But in the venture capital markets in the US, which are more than twice the size of the angel markets, women-funded firms still get about 3% of the capital. Virtually nothing has changed. The private equity markets, the later stage companies, it's even worse. So it's a matter of fairness, that's one thing. But there's also just so much research that says that diversity leads to better results. A lot of it's public company research. International public company research says that if you have the more women in C-suite management, the higher the return on equity. If you have even one woman on your board, you have lower price risk on your public stock. So to my mind, if you are in management of some of these companies and you are not trying to diversify the brains at the table, you are committing, you're not being a fiduciary. And there's now research that says the same thing is true about diverse startups. In the US, women-funded startups, they get to the comparable revenue levels with 1/3 the capital of all male founding teams.
Wow.
Now, part of that's necessity, but they still get there. So I want to take advantage of the numbers. I want to get a better return, and I want to make a lot of women rich, because then they can put that money back in and continue the tide.
It's not just political correctness, it's opportunity, real opportunity. Now, final question to both of you. When we talk about investing and investment, often we solely focus on the monetary aspect. What about the other things that are being invested? Time, mentorship, care. How important are those forms of investment in that relationship?
I certainly am not going to put money in a company where I do not have some insight into what's going on in the company after the fact. And it is also, for you as entrepreneurs, when you're out there looking for money, I think you need to remember that this is not a fly-by-night relationship that you're entering into here. If you take money from a venture fund or even from a well-organized angel, you're you're marrying. I mean, this is like a long-term relationship. So you should like the person. You should make sure they like you, and then you should hope that you can get something else from them. My expertise is the software as a services business. I know a lot about those, mostly in the enterprise space. So if you want me to be involved in your company, I'm going to bring a lot of stuff that I know about, having done this for years. And so I think you want to find an investor who likes your industry, knows something, has contacts, and brings all those ancillary things. And you have to like them and trust them and respect them. And at least you want to start out that way.
Trust, fondness, and respect, key ingredients that you found along the way too?
Yeah, it really is. When you are out there looking for money, you're selecting investors as much as you are the money itself. It would be a mistake to be taking any money because ultimately these people then will probably own a very large chunk of your business. And so if you don't gel well with them, if you aren't aligned on vision or mission or purpose, then you're always going to run into hurdles which cause some pain later on.
Thank you, Joe and Jamie. We will be back soon with our third pitch, and then the panel will decide on the winner. But first, here's the best Alan Jones with the classic startup fairy tale, Jack and the BenCoin.
Oh, hello founders, I didn't see you there. I love a bit of crypto. Do you love a bit of crypto too? I think I've got a story about crypto. Would you like to hear it? It's called Jack and the BenCoin. Once upon a time, there was a struggling entrepreneur who was down to her last hot desk day. The only employee she had left was her own son, Jack. She realized with a heavy heart that she was going to have to shut down her online cattle retailer, dohaveacow.com, and sell the remaining assets. Being focused on the vision side of the business, she asked Jack to list the assets online. But barely had he proven he was not a robot, he was approached by a charming man, offering to exchange the assets for a handful of a beautiful shiny new cryptocurrency, the BenCoin. Despite having been warned by his mother that the online world was full of weirdos, Jack felt foolish for not understanding blockchain and agreed to the transaction as a means of saving face. When he took the BenCoin back to his mother, she was furious. Everyone knew the BenCoin ICO had been a complete failure. She screamed and tried to throw the BenCoin out of the window, but discovering she would require a private key to Jack's digital wallet, she just threw his phone away instead. Jack cried himself to sleep that night. But when he woke up in the morning, the BenCoin had had an enormous spike in value and was now blotting out the sun. Jack and his mother were amazed, and Jack decided to scale to the dizzying heights of the crypto boom. He bought several very fast computers and started to mine, while somehow still heading upwards. When he reached the very top of Mount Gox, he saw an enormous land of opportunity full of untold riches, which he could gain access to completely anonymously. A voice boomed from the cloud, "Fee Free Finance Fund." Jack ran towards the voice, transfixed, but unfortunately a downturn in the regulatory environment for bean-based currency in the Asian markets made the cloud unstable, and Jack plummeted to his doom. And the moral of the story is sponsored by dohaveacow.com, affordable assets grounded in the real world, now under new management. The end. Now, little startups, no matter where you are, we know you're working. Bless. Good night.
Now it's time to meet our third pitcher. She used to freelance as a business journalist, so I hope she's not pitching for my job. Please welcome Jessica Ellerm.
Zuper started with one fundamental question. Why do Australians pay little to scant attention to the biggest asset they have, their super? The fact is, superannuation companies are quite happy for it to be that way, because the less questions you ask and the less you engage, the less you'll know about what's going on with your money and some of the ways fees and multiple accounts are eating away at your future income. That all ends with Zuper. We wanted to find out, what is it that would make you care about your superannuation? So we went out and asked. 75% of Australians told us they wanted to have more of a say in what their super was invested in. So we went out and built Australia's first crowd-powered superannuation platform. Joining today, not only can you find and combine all of those multiple super accounts, and trust me, you probably have more than one, but you can also invest your super into innovative healthcare companies, emerging technology startups, and renewables, all voted up by the crowd and vetted by our community of investment experts. Not only that, but as soon as you join, you can vote on our next investment option, Zuper Women. We want to help you put your super to work in companies not only led by women, but also who promote gender diversity. The point is this: $2.6 trillion of your money is powering the world, and other people are making decisions about it. You don't have to make all the decisions yourself, but having a say is important because only you have your best interests at heart. Superannuation isn't just about retirement, it's about powering the world right now. So if you do one thing, no matter whether you're in the gig economy, working full-time, part-time, a mum, a dad, a parent, a friend, please jump onto our website and check out what we're doing. And if it inspires you, we'd love you to join and become part of our tribe and tell your friends.
Thank you, Jessica. Let's start with you, Joe. Any questions about Zuper?
Jessica, can you talk to me a little bit about customer acquisition strategy and what you think it's going to cost you because you have to drive individual consumers to this website?
Yeah. So we understand that in the industry in general, because a lot of superannuations have default distribution baked in, they've never really had to think about actively acquiring customers. So when they do go out, they're not digital or marketing savvy businesses, so it costs them a lot, potentially up to $1,000. We know that some of the more digitally savvy superannuation firms are getting that down to about $200, but our testing is showing that we can drive it down to probably $50 or less. And we're putting a lot of effort into member type programs, so rallying the community around to get the word out there, and also some great education partnerships. So we actually partner with Academy XI, who are involved in this production. And when people join our fund, not only do we help them invest in things they care about, but we give them exclusive education discounts. Because one of the big things about super, everyone tells you, is just put more money in it. But of course, if you just earned more money, more would get into your super. So we're really passionate about educating Australians and helping them earn more.
What about you, Jamie?
Can you explain to me a little bit more in regards to me having some control over, I guess, what my portfolio looks like? To what extent is that actually manageable by me? How does that work?
Yeah. So we have to bear in mind that our community of members have never made an investment decision in their lives, despite the fact that Australia probably has the most amount of investors per capita in the world due to the fact of superannuation. So we did a lot of behavioural psychology and testing when we designed the platform, and we kept the choices very limited. So today you can put 80% into a core index product, which removes tobacco and controversial weapons. You can also remove fossil fuels if that's your thing, and gambling and pornography. And then 20% you can allocate to these kind of big mega trend products. And everything's ETF and index funds. You can put 20% into one, say innovative healthcare, or you can split your 20% across 2 or across 3. And then over time we'll sort of play around with that asset mix, but we're trying to find that balance between making the decision easy for somebody, making it safe, and fitting in line with what the regulators would think how super should be invested.
Please thank Jessica, everybody.
Well, Joe and Jamie have got some serious thinking to do to pick tonight's pitch ring winner. In the meantime, what's our final takeaway from Down on the Floor, Mel? Any tips before I start asking around for the tram fare home?
Well, this game has gone all over the place, so I'm just going to call it, we're all winners here. So you get a BenCoin, and you get a BenCoin, and you all get a BenCoin. But the price is tanked, and now we're all broke. So Back to you, Rae.
Thanks, Mel. Well, after the failure of BenCoin, I've launched my own coin, which uses no electricity and feeds third world children on recycled hope. You can see all the details in my documentary, The Fall of BenCoin and the Rise of Raycoin.
No stars from me. Now it's that time of the night. Our judges are about to announce the winner of the pitch ring. Joe, can you announce tonight's winner of the pitch ring, please?
After consulting with my fellow judge and entrepreneur, Martin, it's you.
Congratulations.
Oh no!
We know it's worth it now anyway. Martin, everyone. Congratulations, Martin with Toledo. You go in the running to compete in the grand final, where you could win some epic prizes.
And that's all we have time for. Please thank our pitchers and our panel, Joanne Cochran and Jamie Skella.
Next week, That Startup Show gets its annual physical when we look at body tech. We're going to live forever, and not in the dumb metaphorical kind of live forever through art, the cool kind where they keep your head in a vat of slime.
And don't forget, if you want to be in our audience here at the Good Shed in Melbourne on Thursdays after work, grab your tickets at thatstartupshow.tv.
See you all in the slime vat.
Congratulations, Stuart. That was a great presentation. How do you think you went?
Thanks, Mel. Look, it was a lot of fun, but I'm not sure if they were so sold on the swag.
How do you think you went?
Yeah, look, it's always tough to get up in front of an audience, and especially a panel of such esteemed people, but I think it's fun, and it was great backstage chatting to the guys, so yeah, you just got to give it a crack.
Am I going to see you in any of my supermarkets soon?
Hopefully. So we look at sort of rolling this out into our market in the next 12 months.